to talk about Avantis. As you can see here, we've had a drop inside of Avantis. I'm going to talk about what happened inside the charts, and we're going to get straight into it. Remember, I'm not a financial advisor. None of this is financial advice. But look at this. We are down 11.4% in the last 24 hours. Avantis is in the top for losers, not gainers, actually for losers on CoinGecko right now. So yeah, that's pretty big. Down 26% in the last 7 days, but still 67% in the last 14 days. So, it's still up some amounts, right? Anyways, 540 million in trading volume, 355 million inside of market cap, and we're at $1.37. But you can also see the trading volume was extremely high earlier this month, around the 20th and the 22nd of September. It was actually at 7 billion. That was one of the reasons why Avantis was doing so well. But now the trading volume is only at 540 million. I don't want to say I predicted this, but I did say if our trading volume doesn't stay in the multiple of billions, then the price is going to drop because the volume is not there. It was only pumping off of the hype because so much volume was going through Avantis. After that hype has died down and there's less volume, there's no reason for it to continue to pump so much. So now this thing is not pumping as much as it once was. So that's definitely something that you have to watch out for and pay attention to. But good thing for Avantis is they are a trading platform. So eventually it will come back. People are just trading. They're not trading as much. You have to think about it. As Bitcoin goes down and as more liquidity leaves the market, we're going to see the price of Avantis going down. But as Bitcoin goes up and more liquidity joins the market, we will see it going back up. So right now, things are relatively bearish overall for the crypto market, which actually drives the price of Avantis down. So that's one of the reasons you can see here, even the trading volume in crypto, it has dropped as well. Overall, all the cryptos, the trading volume has dropped tremendously. So this is something that you definitely also want to pay attention to. So yes, it has dropped in trading volume for all crypto. So what I do want to point out to you guys is this that I have from yesterday. So this right here is a video from yesterday that I made, and I was talking about something very particular, and I'm gonna let it play right here. Here with Avantis, but we do still run the risk of a short-term pullback to $1.30. So I was talking about the risk of the short-term pullback to $1.30. I was also mentioning earlier in the video that yes, we do have bullish signals here, and we did because as you can see here, the MACD was showing that the sellers were leaving the market. We're seeing buyers stepping in. That's what this means on the MACD right there. And then we also had the %R trend exhaustion on the 2-hour chart. And I actually mentioned on the 2-hour chart something very particular. Let's go ahead and pull that up right now. So this is the 2-hour chart. I was like, hey, we're about to cross here on the MACD, but if this cross brings us downwards, like let's say we cross right here, then that is going to cause a downtrend if we cross and go down. So we've seen that the MACD was simultaneously going up with the long-term and the short-term trend, but there was always that possibility of that short-term pullback here on the MACD. So that's kind of what we ended up seeing here on Avantis. So what do you want to watch out for now? Well, remember I mentioned $1.30. So we've already kind of hit $1.30, right? But we didn't hit $1.30 flat. So what I would just watch out for is our Fibonacci's. If we hit $1.30 and we can't revive from there and bounce back, then what we're going to end up seeing is $1.05. That's the next level. So if we break below $1.30, it'll probably start heading here towards $1.05. It doesn't necessarily have to go all the way down to the Fibonacci support, but there's a high possibility that it could go down to that Fibonacci as well. So there's a possibility, that we could go down even further. If we break $1.30, well, really that Fibonacci is at $1.28. If we go below $1.28, we're definitely heading towards $1.05, and that puts us at even higher risk of $1.05. If we hit $1.05 and break that, then what we're looking for is 88 cents. And actually, I mentioned this in my previous video, how a lot of base projects do this. So look, this is pretty much what happens with base projects. They pump, they have an enormous hype to it. They have a bunch of hype. It goes up to like 500 million market cap, and then it dumps down to sub 300 million or high 200 million, right? It stays around the 200 to 300 million market cap range, and it trades sideways for a while. So Avantis has kind of done the same thing, where they pumped all the way up here to a peak of 600 million, and then they came all the way back down to 355 million, and now they might stay around this range for a little while longer until the volume for the whole crypto market picks up and until Bitcoin starts to do better. We're also seeing sideways movement, heavy sideways movement from Bitcoin, which is a little odd. It's very odd, actually, how sideways it is. Just look at it, what it looks like here on CoinGecko. It looks like a very odd movement here for Bitcoin. It's very, very flat. Another thing you want to look at, the percent R trend exhaustion for Bitcoin shows that the trend is just completely bearish and completely sideways right now. So even though there is showing selling volume on the MACD for Bitcoin, it's still sideways. So it's still technically bearish. And if you look at the daily chart for Bitcoin, you can see the bears are not finished with us yet. The bears are not finished. You can see like the MACD could have more selling coming to it with Bitcoin. And we're not at the bottom of this channel yet. And this is what I'm looking for in Bitcoin. I'm looking for us to pull back to like 104K. So also, it's probably, I think it's going to go below 104K, but first we got to get down to 104K because that's the Fibonacci support. But then after that, I think that Bitcoin might have even more pain to the downside, right? We might see a bull trap where it tries to break out, gets up to like 115K and gets rejected. So that's a possibility with Bitcoin that we have to watch out for. So that's something that could happen with Bitcoin. And if that happens with Bitcoin, just know that Avantis and everything is going to get dragged down by it. Even though Bitcoin has been down, Avantis has been pumping. But now that the volume on Avantis has dropped, we're now seeing Avantis going down alongside Bitcoin and everything else. It was inevitable. The second the volume stops, we start to see what is really going on with Avantis. We start to see what's really going on with the overall market in general. So we've seen that drop. So anyways, I'm expecting trend to probably stay sideways and downwards for a little while. So as you can see here, what I mean by sideways, I mean like the percent R trend exhaustion staying sideways here, which is going to cause the price to continue downwards. So that's what I'm looking for here in Avantis. Again, I think $1.36, $1.30 is about to be broken, and we're probably going down to $1.05. If that's broken, we're looking for 88 cents down here. So that's what you gotta watch out here for Avantis. But yeah, let me know what you guys think about this. This is how it is when you're trading. So that's why when you're buying into positions, you have to ease your way into your position. I've seen a lot of comments with people that are upset because they bought all the way up here, but you should have eased your way into your position. If you have $1,000, for instance, look, you have $1,000. So you don't take your whole $1,000 and put it in right here. What you do is take half of your $1,000, right? And then you put it in a little bit by little, right? You put, let's say, 100 in here at the top because you think it might keep going. So you only put in 100 though. But it ends up going down to this support here. And then you dollar cost average in at $1.75. And then you put in, let's say, another $100. And then the price goes up. And then you think, oh no, it's about to keep running. Let me put a little bit more in. So then you put 100 in up here, but it doesn't. It keeps going down. So then it comes to this support at $1.50. Then you put in another 100 here. And then the price goes down a little more. So then you put more in at $1.35. You put another 100 in. And then by the time you get there, you've put in half of your position. So when you dollar cost average here, half of your position is at a bunch of different areas. You bought at the top, you bought at the pullback, at the support, you bought sub top when it almost got there, Then you bought at the two supports down here, one here and one here. So let's just kind of do the math here, because if you think about it, let's say you put $1,000 in at $2.50, right? You put 1,000 in at $2.50. Well, now you're only getting 400 coins. But let's say you took $100 and put it in at $2.50. Right now you have 40 coins. Remember that you have 40 coins. Now you put in also $100 at $1.80 divided by 180. Now you have 55.55 plus your 40. So let's just say 55 plus 40. Now you have 95 coins, but you still have 300 left. Actually, you still have more than 300 left. You have a whole another half. We only put 500 in, remember that. So now you have 95 coins here, and then you put another 100 in at 230. 100 divided by 230, and now you have 43 plus your 95 coins. Now you have 138 coins. You have 138 coins, 138. And then you got in at 145, so you still have 138 coins. So just remember that 138, and then you also got in at 135. So now you have 74 plus your 138. So now you have 212, and then you bought in again at 130. So remember, you have 212 now. So you have 212 coins currently, and then you have more that you're buying in at 130. So now you add your 212 here. So now you have 288 coins, and you only spent $500. You still have 500 more. So remember, it was like 450. So now we got 288 coins here, but you had only 400 coins when you bought at $2.50, your whole thousand at the top. So now we only spent $500, but we have 288 coins. Well, let's just say you want to wait until $1. You're like, you know what? I want to put it all in, the rest in at $1. So I want to put the whole 500 in at $1. So now you have 288 coins still. And now you want to put in 500 at $1. Obviously, that's going to give you 500. So now add your 288. So now, since you eased your way into your position, now you have 788 coins, rather than only having 400 by just putting your whole 1,000 in at the top. So you see where I'm going with this. So now let's hypothetically say Avantis gets, you're gonna hold it long term, because you're like, you know what, forget this. I'm not gonna keep doing this. I'm not gonna get in and out, in and out, in and out. So I want to take my whole 788 coins and just hold it, right? Where do you think Avantis can get to? I want to ask you guys, where do you think Avantis can get to? So let's say, hypothetically speaking, Avantis gets to $10. That's 2.5 billion. I think that's possible. So let's say it gets to $10. You have 788 coins. So now let's take your 788 coins, multiply it by $10. That gives you $7,880 off your $1,000. But if you put in your $1,000 at the top of $2.50 and you hold it until 10, now you only got 400 coins, remember. So now when it goes up to $10, you only have $4,000. So if you think about it, you're supposed to dollar cost average for a reason. That's why they call it dollar cost average. You want to lower your dollar cost average. You want your dollar cost average to be at a lower price. You do not want to put the full $1,000 in at the peak. You gradually put the money in as the price goes down, because you know the price is more than likely going to go down. This is what happens a lot of time. This is why a lot of traders aren't successful, because this happens all the time to everybody. You can never predict the market, but you can track the movements of the market. Okay. So this is probably the best strategy here. So if you bought a whole 1,000 in at the top, you're doing it wrong. You want to buy 100 here at the top, 100 here, 100 here, 100 here, 100 here. And then when it hits a level where you're really comfortable just putting the rest in, like $1, I would say that's probably the best area, around $1, maybe even 80 cents. But yeah, then now you have even more coins when you dollar cost average. So that is how you want to do it. But let me know what you guys think about this in the comments. It sucks to see a lot of people losing money, but this is the game of trading. It is what it is. But yeah, if you like this analogy here, though, definitely hit the like button and subscribe. Leave a comment in the comment section. Let me know what you guys think about this. But yeah, you guys got to be really careful when you're doing this trading stuff, because yes, the indicators might say one thing, but the market might say another. So, for instance, when we had our 2-hour chart, we're looking at this. Actually, let's go to the 4-hour chart. So when you're looking at the 4-hour chart here, yes, let's pull up the MACD. So yes, the MACD is telling you that the selling is slowing down here. But what if more selling comes in, right? What if it keeps selling? What if more selling comes in? Well, that's exactly what ended up happening. More selling started coming in. So yeah, according to the charts, it looks bullish right here because you think the selling is gonna stop, but then buying comes in, boom, and then what happens? Then it starts to sell off. So when on the MACD, when you see dark red candlesticks, that is because sellers are stepping in. When you see light red candlesticks, that is because buyers are stepping in. And then vice versa. When you see dark green, buyers are in. When you see light green, sellers are in. So that's exactly what happened there. Like, it was showing a signal showing, hey, buyers are coming in. But what happens when those buyers leave because they profited already and they're just trading? Well, then the price drops. That's exactly what we just now seen. So anyways, I'll keep you guys updated on this. I think Avantis is still in a good space. But yeah, I do think 100 or not 100, $1.05 is probably going to happen soon. If we break that 30-cent level, then we gotta watch out for that. So get ready, be prepared. And even now, like if you're thinking about dollar cost averaging in, or if you're thinking about buying on the dip because you want to buy at $1.30, what I would say, like if you're putting 1,000, put 100 here, goes down to $2.05. That's probably a good area to put like 200 in, and then wait, see if it what it does. If it goes back up, I would just hold, and I wouldn't even put any more in. If it goes back down, then that's when you start putting in more in around this area. So be smart about how you enter into your positions. But anyway, this is all I have for you all today. Hit the like button, subscribe, all that good stuff. Remember, I'm not a financial advisor, none of this financial advice. Leave a comment in the comment section. And as always, I'll be back with another video.